Okay. Welcome. We're going to go over how to use the Fibonacci retracement. This is a very good tool to use to pick out points where price may come back to and then take off from. So this is a variation of support and resistance. You usually take it in a trend. So first you need to identify a trend. I'm going to be using, this is going to be a Forex pair. This is going to be the British pound versus USD. So I already know this is my low. My trend from this area is up. So all I'm going to do is pick out my lowest low, which is here. I've already selected my Fibonacci retracement tool. I'm going to click here once. I'm going to drag this to the top there. Now, what I've just done is taken price action and separate it into areas where price action may have issues, either finding support or finding resistance. At this point, we know that this is our highest high for this particular movement. This is very important. You must pick out the trend before you use the Fibonacci retracement. If you pick out the trend and use it incorrectly, you're going to get incorrect data. So first and foremost, identify trend. Once that's done, you start at the bottom of the trend if you're going in an uptrend, and you go to the very top. The same thing will be true for a downtrend. I'll show you that as well. Now remember, our videos are just going to be 10 minutes, so you get everything you need within that 10 minutes. The information you need will be for any situation you might be in. And we are not telling you to buy, sell, trade, or put your life savings into something you know nothing about. So please do your own due diligence. Now this market is moving, but it is a Sunday night, so it is pretty slow. Now with that being said, from our bottom of our trend, first you see this huge institutional candle here. That means that was all big money coming through. That wasn't us. All we do is follow. We do not make these kind of moves here. So we came all the way up, as you can see on certain levels, 1 right here, 2 right here, 3 here, and of course 4. Now, only reason we pick up 4 is because it's at the very top. These others, because we did our Fibonacci retracement correctly, these line up to areas that are support and resistance. And some of these numbers mean very particular things. Now, with that being said, we will be going over what that number may mean. That's the 0.236, the 0.382, the 0.50, and of course, everybody's favorite, the 618. So these numbers all have specific meanings. We're going to go into more detail about them in a later video. This is just to tell you how to use this specific tool, the Fibonacci retracement. Now, with all that being said, what you can say is that if you have topped out, every time you get a huge move, you need a retracement. Price action needs to come back and pick up orders. It can't just go straight up. That's not healthy. It's not normal. Think of it as a building that only has one pillar to stand on. So this is the only thing supporting all of this action. That's not good. What we need is a pullback to first break this up to give our new price action going forward more support. So anytime you see one of these big long candles here, think of it like this. Most of the times I'm going to have price action come back to break that up. So we have a couple of instances where we have big long candles. So here's one here, right there. Now we also have right around that area, this. The price action here going down was then broken up and given support by this new price action on the other side. All right? So now it has support for the price action moving forward. There's not just one leg to stand on. What we're looking at right here in our current area is about the same thing. We have a big institutional candle here, and it's going to need some kind of support. Can't hold all this price action up by itself. What we're looking at right now is the British pound US dollar and the hour chart. And I want you to focus on this area. This is signaling that it may do a further retracement down. Now with that being said, let's pull out this Fibonacci retracement one more time and let's see where it might go to. I got the lowest point of my trend. It started there. It ended here on the very tops. Some people put them on bodies of bodies. I put it on wicks to wicks. I feel like that's what it is. That's just my thing. Everybody does it differently. Now, to have a good pullback to go further up, I would at least expect it to come to the 0.382 level. Or, if you look over, that's the 1.16519. You can do it that way with the, I just go by the Fibonacci number. And generally, what I'll also do is I'll just mark the area where I think price action may go. There we go. And say I forget why I did it. All right, let's look for a reversal. Maybe. Let's see. You never know. So now I know I'm looking for a reversal at this area. I don't have to have this on my chart the whole time. Sometimes, you want to look at a clean chart. Other times you want to have all your indicators on there to make sure everything's going good. But this time, based on what I see, I'm looking for this to come down at least to here. And if it did, I would be very happy. Why? Well, I'm not trading this right now, but I do like trading Forex as well. It is one of the best markets if you're looking for volume and consistency. And remember, it's traded worldwide almost 24 hours a day. So with that being said, we have an expectation. Maybe we'll get some confirmation later and we'll come back and see how this trade did. Let's mark it up and see if we did a trade right now, what would it be? Let's bring this down. Of course, we don't want that. I'm going to put my stop loss above the highest high, right about there. And right there, let's give it this hour, so let's give it about that. Now, with that being said, this would be a 2-to-1. So I have a 2-to-1 right here. That means I'm risking 1%, but I would gain 2% of what I put into this trade. Now, I'm just doing this to see if my assumption is correct, because I want some more confirmation so I can put in more money. But first, I might need more confidence. So this is going to help me with my confidence and let me know if my assumption is true. If it's wrong, it's wrong. But if it's right, it's right. At this point, I'll take it for what it is. So this has been the Fibonacci retracement, and you can also see it on the way down over here. So let's get this out the way. Fibonacci retracement, and it's going to be about here. I'm going to bring it down to our lowest point, right there. Now, if you notice at this, we came down here. Once it came down, it came back up right here to the 618 area. Then it dropped down again, paused again around this 236 area, bottomed out. Places where it got stuck, right around that 312 or at 382. Then it got up here to about the 0.50. If you notice, these levels stay consistent. So practice with that. Remember, you had to pick the correct direction of the trend. Once you do that, pulling out the Fibonacci retracement may help you confirm some of your assumptions, and it may also give you some areas that you want to look at to enter, exit, or take profit. Once again, this was the Fibonacci retracement. I hope it was helpful. Less than 10 minutes. If you want something else about this, let me know. We'll put it up here for you. All right. See you next week.